No, live. All right, we are live and alive, guys. Good morning. Hope you had a great weekend. It is Monday. It's the start of a new trading week, and it will be the end of the month. Friday is May the 1st. So there's a lot of things to talk about and go over today. Let's jump right into it, and let's get started. Okay, stock markets are green across the globe for the most part this morning, with expectations of lockdown measures being eased or lifted in the near future. Even though oil tumbled under 15 bucks a barrel, all right, Spain is starting to ease their restrictions. Italy and New York are laying out a timetable for reopening their economies slowly in different phases. On May 4th, restaurants are going to reopen, and then retail outlets as well. I think it was May 14th was the date that they'd put out. But this week, you're going to hear more about the plans. Right now, the stock market's excited that things are going to start to reopen. The economy is going to get restarted again. All right. Right now, the keys in the ignition, it hasn't necessarily been turned over yet, but there are plans to do it. And so we're going to hear about that as the week progresses. Bank of Japan also threw some more stimulus overnight, or over the weekend rather, at the market, lifting its upper bound, saying they're going to buy as much as required. We got a Fed meeting and European Central Bank meetings this week. It's a super busy week for the market. It's a transitional and a very pivotal week. Not much expected out of the Fed on Wednesday afternoon because, they've already taken a lot of action, but there's going to be some interesting commentary. They'll probably reaffirm they're going to continue to do what they're doing. ECB is going to be super interesting. There's an expectation there that they beef up their purchase program, basically adding more stimulus. So that'll probably be a more interesting central bank meeting than the Fed this week. All right. Also on the earnings front, 173 companies of the S&P 500 are reporting quarterly results today for Q1, and 12 Dow Jones companies. So almost, remember Dow Jones is 30. So almost 40% of companies are reporting this 1 week, and about 25%, a little bit more than 25% reporting in the S&P 500. So super busy week, including Facebook, Apple, Amazon, Google. Okay, those companies are going to be really heavy hitters after the bells. And a couple of energy companies as well are due later on this week. Go have a look at the earnings calendar. Super important. Other news events that we're going to be encountering this week that are very important. Today, there isn't anything super significant. Tomorrow, we have consumer confidence at 10 a.m. All right, Wednesday, we have the FOMC statement and press conference at 2 p.m. But first, at 8:30 on Wednesday morning, we have the advanced GDP quarter-to-quarter number. That one's super important. Remember, it's only for Q1. So the expectation is minus 3.9%, a 4% drop in GDP. You got to keep an eye out on that time, 8:30 a.m. Eastern on Wednesday. It's going to be like a mammoth number everyone's waiting for. And, the Q2 is the one that everyone's really waiting for, but the Q1 will have to do for the moment being. So GDP is a big one. Okay, then we have manufacturing numbers out of China on Wednesday. Thursday, we got the ECB press conference. All right, the European Union monetary policy statement, and then Friday we have holidays in Europe, so most banks are going to be closed. But we do have the ISM manufacturing print, so huge, super influential, busy week full of key economic data points. Okay. In addition to that, on Friday it's May 1st, which means it's rent deadline, and so it's going to be really interesting to see how the rental market handles this in the housing sector. Okay, Friday rent is due, and if you guys remember, last month the numbers weren't too hot. A lot of people had missed rent payments. It'd be interesting to see what happens this month. All right, the expectations aren't that great. Steve Mnuchin on Sunday said something super interesting I wanted to talk about quickly. He expects a big rebound in the third quarter. On the Fox News interview, he said, you're going to see the economy really bounce back in July, August, and September, he said. All right, you're seeing trillions of dollars making its way into the economy, and I think this is going to have a significant impact, he said. And he also mentioned this is not the financial crisis of 2008. Be careful when people say that, right? When somebody has to tell you what it is not, it is likely what is concerning them. So be very, very careful. Some interesting data also came out of the White House economic advisor Hassett. But before we look at that, let's talk about this for a moment, all right? It sounds like Steve Mnuchin's trying to take the pressure off of the Q1 GDP print. Because he's saying July, August, and September, there's going to be an economic bounce back. So it's like July, August, September is what period? Okay, it is Q3, okay? But what about April, May, June? Q2. So he's basically saying with this indirectly, if you read between the lines, look, Q1 is going to be bad. Q2 is probably going to be worse. But in Q3, we're expecting a turnaround. So let's focus on that. All right. He's trying to say, next couple months are going to be rough. Forget about that data. Look forward to the future, because that data doesn't include the fact that we provided so many stimulus programs. All right. Both monetary and fiscal policies on both sides. And then White House economic advisor Hassett said that Q2 second quarter GDP will be the largest negative number since the Great Depression, and likely minus 20 to minus 30%, while Q3 will likely be positive. All right. They're expecting, this is an economic advisor of the White House, a minus 20% GDP print for the second quarter. That's going to be devastating. So even though Q1 is important this week, Q2 is even more important, and we're going to have to wait a long time for it. All right, 3 months from now, basically. He also said the U.S. unemployment rate is likely to reach 16% or higher when this month's jobs report is released. As a reminder, that will not actually be this Friday, even though this Friday is the first of the month. It's the way the 12th of the month falls, so it's going to be next Friday for non-farm payrolls. All right. Let me just check something quickly. Yeah, it won't be this May 1st. It'll be the following Friday, Friday the 8th of May. All right, so there's an extra week to wait. The non-farm payrolls report is so difficult in terms of the release date. I think it has to be the third week, where the Tuesday is after the 12th of the month, for it to be the first week reported. Anyways, what you need to know is that it's not going to be this upcoming Friday. It'll be next upcoming Friday, which is great because we already got a lot of stuff on the docket this week, don't we? We have GDPs, we have central banks out of Europe, out of the US. All right, we got so many companies reporting earnings. This week's going to be a kerfuffle. There's going to be a fight out there. I'll tell you this. If you're looking to do any trades or investments before knowing all this information, you're either gambling or doing something illegal. And I don't want to know if you're doing any of the two. I'm more interested to see these numbers come out once information's in the market, to then start to do some of the longer term decisions, where in the moment, just short term day trade for cash flow. That's the goal until all this data comes out. Today is probably going to be a bit slower because we have kind of touched the upper bound of the range that we're in, and I expect to see a little bit of selling early on in the morning. So I wore the "Sell the effing rip" t-shirt. So it's going to be interesting if we do take out that top. Well, we can get a little bit bullish, but I think considering it's Monday and we have just a couple days before some economic prints that are of significance, we're not going to, go ahead and probably rally right now too much. People are going to be waiting on the sidelines. As we hit a resistance, there's going to be some supply that comes in to lighten the book going into these events. As we hit support, it'll probably make some sense for some people to get long, and that kind of keeps us gravitated between that range. All right, Japan's up 2.5%, Hong Kong up almost 2%, China up 0.3%, India up 1.5%. In Europe at midday, London's up 1.7%, Paris up 1.8%, Frankfurt up 2.4%. European markets strong across the board. In the U.S. futures, Dow's up 1.1%, S&P up 1%, NASDAQ up 1.3%. It's very tech heavy, a lot of anticipation in NASDAQ out of these big tech names. I think tech stocks will do better because they're going to do less worse than expected, which is better for the market. All right, so that's one of the things I'm kind of looking out for. But I'll tell you this, the top 5 companies have a really high concentration. A lot of the moves in the S&P 500 are attributed to the 5 FANG names. Make it 6 if you do an extra A in there. And so NASDAQ's a little bit stronger anticipation of all these earnings after the bell. Got a lot of companies dropping this week. Crude oil is down 15% to $14.27, now trading even lower. Overnight low is $12.46 on the June contract, the M. And there's the pressures remain. Nothing's changed. Oversupplied, under demanded market. A little bit of downside to come. What is interesting though is that the stock market has diverged widely from crude oil. Right, stocks are like ripping, and crude oil is actually dropping. So these are two traditionally correlated markets that are at the moment not so correlated, and one could even say inversely correlated. This could happen for short periods of time, but at some point, crude's going to rally or stocks are going to drop. These things are going to close off the gap. You don't necessarily have to do a long-term capital management and put a spread trade on it. So let's say you go bankrupt just because you think something's going to happen. You got to have a little bit more grounds for making a decision than that. But it is interesting. Okay, gold prices are up slightly, not too much, 0.3%. Bitcoin's up almost 2 percentage points to the high 7,000s. And on the economic calendar today, 10:30, we have Dallas Fed manufacturing survey. 1 p.m. we got 43 billion 5-year note auction. All right, that's your preview for the week. It's your preview for the morning. I'm gonna look to sell rallies this morning as we are reaching the top of a range, and then as economic data comes out, we're gonna have to follow that more closely. You guys have yourself a great day. Thanks, Winston. Thank you for being a member of the TradePro family on YouTube. Appreciate you. And I love you guys. All right, be safe out there. Manage your risk. Trade like a Trade Pro. And remember, our job is not to make returns. Our job is to manage risk. And when we manage risk, the returns will come. There's no other way than them to come. All right. So that's what you got to do. Manage your risk. Pick your points. Be careful with any entries you make, and be sure before you get into any position to know where you're going to exit, because it's a lack of knowing where you're going to exit that creates astronomical losses for a lot of people. It's like you buy a company like Beyond the Meat because, hey, there's going to be a meat shortage. I'm going to buy it for a short-term play. 10 years later, you're still holding it. It's trading at 2 cents a share. Right? That wasn't the idea behind it. You can't meet somebody on the first night and immediately marry them. Not in the stock market. I'd love to hear a romantic story for you and your spouse, but by God, don't be doing that in the stock market. A lot of problems. All right, will result. Love you guys. Have a safe day. Manage your risk. Trade Pro. Peace out. I'll see you tomorrow. Ciao. We're going to put Steven on the mic. He's going to tell us a little bit about oil. Then we'll go back to the equities desk and we'll talk about some entry points today, where to manage risk, where to put some size on, and where to flip on the flip zones. All right, guys, let's get started with the room.